In this video, we will learn about a purchase return. So what is a purchase return? A purchase return refers to the process of returning goods that were previously purchased from a supplier or vendor, and usually because they are defective, excess, incorrect, or not as per the specifications. So it's also called as a vendor return or return to a supplier, and it's a document and transaction created in ERP to reverse a previous purchase, reducing a stock and reversing your GRN, that's your goods receipt note, and updating accounts payable. Before getting into the procedure, let me explain the concept in detail. And so this slide consists of your party name, which of Abrami Precision Works. Then comes your item ID and the item which you are going to return for the quantity of 50. This slide consists of your workflow approval. So which holds two processes. One is of reviewing the document, another will be the approving the document. First and foremost, the user will be creating a document. So after giving up the entries by the user, the document will be getting forwarded for review to our supervisor. So here our supervisor is of Kaushik. And after the reviewing, the supervisor will forward the document to the approver. So the approver here is our manager, and here manager will be of Vimal, who will be approving the document which has been forwarded by the reviewer, that's of supervisor, to our manager in order to approve the document. So this is how your workflow approval will be. So now let me show you how you are going to proceed in our ERP. So this is our login page, and we'll be entering as user. After giving a username and password, click on login. And now move on to your financials. At transaction, you have your debit note. So click on this debit note. And so this is a page of your debit note. So which is a document issued by a buyer to a supplier to reduce a payable amount due to the reasons like purchase return, damaged goods, or overbilling. So it serves as a formal record of adjustment in accounts between you and the vendor. And so the screen would be like this, where you can filter the item either by header wise or through line wise by giving a search. And here we have two icons, one is of creation, another is of pending. So now we will be clicking up on this yellow icon, that's of pending. And now go on to your purchase. So we are going to return the quantity for this item, that's of RIM, and so the party name, that's of supplier name, that's of Abrami Precision Works. And so the return quantity, I'm giving it as 50 from 190. And now click on create return. Give your date. Click on OK. And so the document will get displayed up. So here you have your location ID, unit, and so a document prefix, document number, which will get generated automatically. Then you'll be having your document date. Then comes your DN prefix. It's your debit note prefix. Then your debit note number. Then it consists of your debit note date, and then type, that's of debit note purchase return type. Then it holds your party name, that's your supplier name. And this is your payment term, which defines the conditions and timeline under which the buyer must make payment to the seller. It specifies when and how much the customer needs to pay after receiving your goods or services. Then it's of your Incoterm, that's international commercial term, which defines the responsibility of buyer and seller in international or domestic trade, especially related to your transportation, insurance, and risk transfer. It specifies who bears the cost and risk of moving goods from seller to your buyer. Then comes your ship through, whether by road, air, or through sea. Then it holds your goods type, that's with goods, and so reference. Then it's of your narration, where narration is a text field in ERP used to provide additional details or comments about a transaction, and it explains the purpose, special instructions, or context for the transaction, but does not affect your financial calculations. So narration, I'm giving it as your purchase return. And now click on the reason for what's the purpose we are returning it. And then you have your CPC code. That's your cost and profit center. It's a unique identifier code assigned in ERP system to represent a cost center or profit center. It's being used for your purchase request, purchase order, invoices for your cost allocations. So when you give up your cost code, your description will be getting fetched up from your masters. Then comes your status. Still the document is on process. It's of draft. When it's been forwarded, status will be changed to entry completed, and when been approved by the approver, will be transformed to your approved status. And so this is the line which has been fetched up from your pending. Then you have your ship e-way details. That's information about the shipment of goods, including shipping address, mode, and delivery schedule. And so your e-way details, that's of mandatory GST document for transporting goods exceeding a certain value. Then comes your project and due. That's a specific project or job the sales order or invoice is linked to. The payment due date for the invoice which of due. So when you are moving on to your lines, it holds up the pending documents for which you are going to return the quantity. Be entering your GL account, that's general ledger account. Then your CPC description, which is of general. And it holds your UIM, that's unit of measurement, quantity, that's your returning of, and so the price. Then comes your debitor and creditor, and your HSN and SAZ code, that's a harmonized system of nomenclature that's been used for goods. And when it's of service accounting type, that's been used for services. It classifies the product or service for your GST purposes. Then comes your tax percentage, the percentage of tax applicable on the item, that's based on HSN and SAZ. And so of your IGST, that's integrated GST applicable on interstate sales. And so of your CGST, that's been applicable on intrastate sales collected by the central government. So of your SGST, that's applicable on intrastate sales collected by a state government. Here comes your UTGST, that's Union Territory GST, applicable on intrastate sales in Union Territories. Then the GST type, and so the input type it holds of. Then comes your reverse charge mechanism, that's of your RCM. So RCM is a concept under your GST where the liability to pay tax shift from the supplier to the recipient, that's of buyer. So if you want to enable it, you can enable, otherwise you can disable it off. Then comes when you click on this detail icon, so debit note details will be getting displayed off, which holds of your GRN details, discount details, and so the item details, and so on. And this action consists of a bin icon where you can delete or cancel the line. If you do not want this line to get proceed further, you can click on this bin icon so that it will be getting deleted off. And when you click on this location details, it holds up your ship to, bill to, ship from, and bill from addresses where it's been traveled through. So after giving all such details, click on save. Click on create invoice number, and this tab consists of your lot number, serial number, and so a quantity. So this will be getting fetched up from the item, whether if it's a lot item or serial item, that lot number or serial number will be getting fetched up here. If it's not, then it would not be getting displayed up here. And now click on create journal after giving all such details. And so journal has been created. So journal creation is the process of recording financial transactions in ERP system using a journal entry which affects your general ledger accounts. So in order to view the journal, click on view journal. And so it will be getting displayed up with your GL account, and so a CPC code and debit and credits of where you can view it off. And now click on post. So the document will be getting forwarded to Kaushik, who's our supervisor, for reviewing the document. Now click on OK. Now let's log in as our supervisor. Click on login. So this is a login page of a supervisor. Go to your bell icon and move on to approvals. So the document has been waiting for to take the action. When you click on this detail icon, that's a file, the document will be getting opened up. So here you can have the review of the document and let's ensure the quantity, price and so the item. After having a review, let's click on move, approve. Now the document will be getting forwarded for approval to our manager. And click on OK. Let's log in as our manager. Click on login. And so this is a login page. And so let's search it by our debit note number and click on search. When you click on this DN number, it will be getting viewed up. And so here you have your preview cost. ஒரு நிமிஷம் தினேஷ், preview cost முன்னாடி அந்த display சொன்னதுக்கு அப்புறம், and now the status has been changed to invoice after getting approved from your manager. So here we have a preview cost, which is the estimated cost of an item or product calculated by an ERP before final posting or a production that's based on raw material, labor, overheads and other charges. When you click on this workflow history, it's a chronological record. So when and how the document has been created, who has been approved and who has been forwarded the document, consists of the accountability, traceability, which shows the transparency of the document. If you want to enhance any folder, you can click on this attachment. When you click on this print icon, a report will get generated. And this is how you will be doing a purchase return. Thank you for watching.